Hi, Matt. How you going? It's Taso Arima, co-founder and CEO of IperionX. Thanks for having me again on the show. IperionX, we're looking at reshoring the titanium metal supply chain from end to end, from minerals and scrap all the way through to titanium metal products with innovative technologies and our titanium metal asset as well in the United States. And I'm here to give an update on the excellent progress we've been making thus far.
Great. That's good to see you again. We saw you a year ago, got a good update then. You had a bunch of stuff you needed to deliver. So I would like, if you don't mind, to have a conversation today about, obviously clearly where you're at, and more importantly, how you scale this thing, because the technology is there, the market seems to be there, but you've got to make money and you've got to grow. So why don't we just remind people precisely what the company does, what it has in terms of the assets and what it's producing?
Absolutely. So IperionX, we have really two core key assets. We do have a titanium mineral resource, which we fully permitted last year, called the Titan Project in West Tennessee. It has rutile, ilmenite, and rare earth products as well out of it, and zircon. It's an outstanding asset. It's strategic in the sense of we can provide that end-to-end titanium metal supply chain because of that. But where we're really focused on is our innovative technologies. That's our primary asset. Our innovative technologies were developed out of the University of Utah by Professor Zach Fong, funded by the Department of Energy. The funding was provided to Professor Fong to really develop a way of making titanium metal cheaper and more sustainable, so it could be used in the automotive supply chain. And so we took over those technologies in 2021, shortly after we listed on the Australian Securities Exchange. We're now dual listed on the NASDAQ, as you know. And we proceeded to scale those technologies up. Initially, we took over a pilot facility in Salt Lake City. We industrialized that pilot facility, brought in excellent group of people to really put the standards around that and prove at that facility that the technology works day in, day out. And now we're at the point of scaling that technology into commercial scale in Virginia, where we secured a site in September 2022. And today we're actually in construction in Virginia, and we'll be commissioning that facility in the second quarter of this year. So we're right on the precipice of really scaling up technology that can take, essentially refine and also create forged-like titanium metal products to reshore a sustainable supply chain that's also lower cost in the US.
Right. Okay. So let's break that down, because you've got the Titan Project, which is it's a large titanium mineral resource in the US, but you've decided, or did the market decide, that you wouldn't advance that? And because it's really important in a difficult market like this, experienced the last 3 years for mining equities, mining juniors, it probably didn't make sense to spend too much money on that, and you kind of focused on the technology. Can you tell us about this sort of the decision making around why one, not the other, why not both?
Yeah, it's actually a great question, Matt. So yes, the equity market for mineral assets, has been tough, and so it is harder, especially now, as you've seen, minerals prices come off to develop it. But it's still a very strategic asset and important to eventually develop it. But before even then, we started seeing the opportunity in the technology to be able to take titanium metal scrap initially and produce titanium metal products. Now, the titanium metal scrap out there, only half of it, we calculate only about half of it is actually recycled into titanium metal products. Half of it is downcycled into the steel industry. And so there was this opportunity to bring full circularity to the titanium supply chain, which the market loves, our end customers love. They want a 100% recycled product. As you can imagine, there's titanium products out there from, bicycles through to smartwatches and smartphones now with the Apple iPhone 15 Pro. And those customers want 100% recycled titanium. So there was a customer-driven demand, and then there was a capital efficiency in our minds of scaling this unique technology, which allows us to get into the market with product, get revenue for far lower capital intensity than what you would see in a mine project. Build out that technology, build out revenue, build out our customer base, recycle all the downcycled and even currently recycled titanium metal scrap into high quality titanium metal products, grow that business, and then when we need to, tap the Titan project in the future for backward integration. So it's not because of the market. It's I'm happy that we took that approach 2 years ago before the market turned, but it's definitely an approach driven by both customer demand and capital efficiency of scaling this, unique revolutionary technology that we have.
Right. Okay. So I kind of get the recycling and the greenhouse gas emission and the I guess reduced costs of titanium as well for you and the technology. And we'll come on to that. But just if we can finish off on the Titan project itself. So that's in the bag for later. What sort of obligations, costs, etc. are there now to sort of maintaining that and sort of banking that for a future date?
Yes, so we have about 11,500 acres of leases, mineral leases. But we have about 1,500 acres we own and 10,000 acres of mineral leases. So this is in West Tennessee, so it's all private land. We have obligations, like minimum royalties there, just to hold the land. It's relatively low cost to hold it. We completed our scoping study. We completed our feasibility level metallurgical test work. We've put the brakes on progressing it through feasibility studies. I do think, before I get onto it, we also completed permitting on that project. That makes this project very strategic, so we can tap it whenever we need. But we'll put the brakes on driving it through pre-feas and feasibility because of the focus on all our capital into the scale of the technology. But the asset is there. It's an outstanding asset. It is great. And I think it will be something that is strategic for us in the future. And I do believe that it's something that it's an asset that the government, in looking at wanting to reshore the titanium supply chain, there's a lot of, we were recipients of the titanium metal grant last year from the Defense Production Act. We do see that there's opportunities also for funding from the US government for the development of that asset, both through feasibility studies and also into the actual construction of the project. So it's strategic, it sits there, it's strategic to our business, but it's definitely something that it's not the priority right now in the immediate term for our.
Okay, so let's kind of get into the weeds here. So this is another critical mineral, but it more so than some, I would say, because it's a very highly technical metal as well in terms of trying to do what you're trying to do. You talk about some IP, some integrated sort of technologies that you have, which perhaps put you at the front of the queue, perhaps give you that kind of first mover advantage, which is all great. But I'm trying to understand the market for titanium and titanium products that you're trying to create, your ability to produce them, the margin that you can produce them at, and then more importantly, because margin is great, but if it's small scale, it doesn't kind of help anyone, is how you scale this thing into being a meaningful size company. So can you just tell us a little bit about the market first?
Yeah, absolutely. Look, just to touch on what we can do, it absolutely works. That's why we received the Defense Production Act Title III program, and we've been doing it for 18 months, and we've done it at a commercial scale in a few runs already. But the market is big. The market right now, we put out an announcement the other day. The market, just the export market for semi-finished titanium components is $1.14 billion last year at $117,000 a ton. That's the sort of scale. And that's just semi-finished exports. Then there's billets, which is sort of like an unfinished titanium metal raw product, another $500 million, that of exports, let alone the internal consumption within the US and the consumption within Europe. So the market is very large. We estimate the titanium melt market to be around $6 billion and multiples of that for semi-finished titanium metal products, so airframes, bicycle components, automotive components, green hydrogen components, things like that. We think the market is growing as well. Even without us, you see growth in the green hydrogen economy. If you want green hydrogen through PEM electrolyzers, you have to have titanium metal in those electrolyzers. That's a huge growth market, which could be as large as the amount of titanium metal that the US used to import historically. And then you look at the smartwatch and smartphone market as well, which is growing as well. Consumer electronics is a huge growth market for titanium metal. So we see growth in the market. It's a deep market. It's fairly opaque sometimes in pricing, but you do have good pricing data there from export-import data that you can look at. It's a high value market. Now we think that market can grow even more if we bring, or as we bring, the cost of titanium metal down. The titanium metal market, if it's in the billions, the stainless steel market is in the hundreds of billions. If you brought the titanium cost down, you would be able to capture some of that stainless steel market. So for us, we see this enormous market there that's there for the taking. An existing titanium metal market that wants lower cost product, but also sustainable product, but also product that's made in the US, because currently the US has to import all its raw material to then melt into titanium metal to make titanium metal products. So there's a big opportunity to become the Western world supplier of titanium metal, take out the Chinese, take out the Russians out of the equation. And then there's this huge opportunity to then grow that market, being the Western world supplier as well, with lower cost, more sustainable titanium metal.
Right. Okay. So there's a bunch of verticals there in terms of the markets that you can get into. And can you sort of help me understand part of my question there, which was around margin for each of those verticals, because you've got choices to make about the percentage of each of those markets that you can capture over a period of time, and the margins that each of those will deliver to your bottom line, because some will be higher margin than others, and but perhaps the lower margin stuff might give you the bulk of revenue that you're looking for as well. So can you just give us an insight into that?
Yeah, absolutely. This is quite a lot of variables there, because there's multiple different types of titanium metal products. If you look at the existing industry, the industry starts with minerals and scrap. Minerals takes it into titanium metal sponge. That sponge is then melted with some scrap that they can melt. You can't melt all scrap. And then that makes this big 6 to 11 ton ingots, and those ingots are then broken down. And the first really like a common denominator of those broken down ingots is a billet or slab. Now from there, all other titanium metal products are made, whether it's tube, wire, bar, plate, sheet, things like that. So we estimate that billet, that intermediate product, that from what all other products are made, is about a $60,000 a ton product if you look at it today in the US. We put out numbers, and if you just want to take it simply, right, this is the simplest form. We could replicate that sort of billet replacement. And I'll talk about how we can even go more. But if we just replicated that billet replacement, we outlined costs in phase 2 of our Virginia facility. And this is before we really scaled, just where we could get to 2,000 tons per annum in the recent release of about $30,000 a ton. Now then, to make that billet is not much more than that. So, another $3,000 a ton we put there, something like that, $3 to $10 a kilo. So just to make a billet, we could make it for around $30,000 a ton, and you could sell it for $60,000 a ton. And that's the whole market. That's where that whole market starts from. So you could simply look at our business as we could take a $30,000 a ton margin over what is a few 100,000 tons of product. So we could build a very, very good business just off that. But then our technology allows us to not just look at making that billet. We start from powders, and we can consolidate those powders using our forging technologies into that billet. But we could go even further, and instead of just making that billet, we could consolidate it into near-net shape products. So that billet has to then be rolled or broken down or forged further, rolled or extruded further into other products like wire, like bar. And then even those products, once you have a bar, need to then be made into a watch case or smartphone case, or an airframe. From powder, we can go directly into the bar or sheet, which would be a multiple. So that's where that semi-finished product is, $100,000 a ton plus. Or we can go even further down that chain and make the actual watch case itself. And those, for instance, we sell watch cases today, 3D printed watch cases, to Switzerland, and they sell for much, much higher than that. So there's multiple markets we could take it into. Taking it simply, we could make that billet replacement where we would have 50% margins, but we will go even further down the line. Now, there's going to be some markets now, like consumer electronics, where it will develop, where we make these near net shape watch cases that they then machine, that the customer then machines, and we sell them for a higher amount. But as we're growing into that market, it takes some time to grow that. We think grow very quickly. But there's some immediate markets like bar or sheet, which are plus $100,000 a ton, as we see from the import-export data, where we could get into immediately as well. And those would be tens of thousands of dollars a ton, tens of thousands of tons of potential demand. So there's over this year, we're going to take a customer-driven approach to deciding which markets we supply into, because we're still, even as we ramp up over this year, next year, 2026, as we get towards 2,000 tons, we just don't have enough to supply everybody. So we will take a customer-driven model of, who wants the product, who's going to pay for the product, who's going to sign on for those long-term contracts that allow us to scale quickly. And we will be responsive to the customers that want to bring our product into their supply chain.
Okay, so a lot of variables, and it's kind of revenue generated. Not necessarily for us, come for us serve, but it's a case of which markets you will give you the contracts, will give you the revenue opportunity, and you'll react to that. But you've got the flexibility to, I guess, address all of those markets. It'll work itself out, is what I'm hearing from you. But here's the interesting thing in all of this, right? You started off as a mining company, and therefore looking at mining type multiples in terms of the way that people value you. Because I'm looking at this now, go, right, but I think about this slightly differently, and it's going to be hard for people to move from a mining sort of pretext to saying, well, actually, this sounds more like an industrial, which has generally have higher multiples, which is good for you, that move. And you've kind of got got Titan in the background in terms of the supply mechanism at a later date should you need it, but recycling is good for now. Is how do you think people should value your company? On what basis should people value your company?
Yeah, it's a tough question. We are one of one. It's like you try and look at other comparables, and it's tough to see. There's some industrial technology companies out there which have that similar, which started off in a similar way. You have a couple there on the ASX which have done well. A4N, Alpha HVA, and Silex are doing well. They're addressing a critical need in different commodities. We think the titanium market is much more easy to understand, and what we're doing here is real revolutionary to bring down the cost of titanium metal. So you look at those companies, they trade at multiples of where we are. But then really when you look at it, if you look 2 years out, if you look 5 years out with what we're trying to achieve, say just look 2 years out on the 2026 case, 2,000 tons per annum, we're looking at something where you could achieve multiples, get to over $100 million of EBITDA, and you could achieve multiples closer to something like a Helmet Aerospace, ATI, who are operating and listed in the US, focused on the titanium supply chain in some regards, really just on the back end, on the downstream end, don't have that full integration, don't have that innovative technology, don't have the ability to lower the cost of titanium products like we do. And those are valued at, I think closer to the 20 times multiples of EBITDA. So that's where we see ourselves. But that to be able to achieve multiples similar to our industrial, like you pinpointed it right, the industrial type of companies, being able to achieve, or people looking at us and going, it's an industrial technology company. It's got its secure source of feedstock through scrap contracts that we secured last year, but also the Titan project eventually when we need to backward integrate to continue to grow. But this is a industrial technology story that's going to revolutionize the titanium industry. Market's big, TAM's big, margins are large, and the multiples here are similar to some of these existing players in the industry today. And that's where I would hope the market takes.
Okay, because there's some of the variables there in terms of the value, and we've seen this in other sectors of recycling, where initially the kind of scrap, the feedstock is relatively inexpensive, and therefore it allows you to make, one, advance your own technology and production, etc. But at some point, those scrap and feedstock guys catch on and go, well, actually, we'll have a piece of that, and they will change the pricing structure. So in terms of these contracts you secured last year, how long are they for? How do you construct those? And how long before you perhaps you lose a little bit of control in terms of that margin?
So we don't see a loss in control. Like, there is no alternative. It's not like the lithium recyclers which came in there and there's multiples of them. So, they're trying to move around and then the power goes towards the suppliers of the scrap. Here, without us, the scrap is going into the steel industry, and that's a big market, the ferrous titanium industry. Without us, it's just going into that. This is again why I like the Titan project and like to have it there, because as soon as we see that a scrap supplier is trying to raise prices, now we'll play a little bit of a premium already just to take it out away from the ferro titanium industry, but we don't need to pay too much of a premium. But as soon as we start really moving the market, and this I think is more when we're close to 10,000 tons per annum, or hopefully, where we see the market moving is probably when it's 10,000 tons per annum or more of scrap that you need. That's probably where you move the market. That then says we can. Then the idea would be to backward integrate with Titan. But until we get there, I think that the scrap market is deep and liquid enough that we won't affect it, even for that 2,000 ton case that we're talking about, that we talked about in the recent release. So the contracts that we have now, they're MOUs with ELG Utica and with Haru DevTech, manufacturer of aerospace components, to take their scrap. With ELG Utica, it was for 10 tons a month to cover essentially this first phase of our scale up this year. But we see those easily expandable into large contracts and with other suppliers to supply that 2,000 tons per annum. I feel very confident that we won't have any issues there. Again, unlike also the lithium or the rare earth scrap market, it's a well-developed market. It's a deep liquid market. So you have more scrap suppliers than you do just have one company that can pay a premium for that scrap, which is us. So we're in a really good position there right now for that scale up. I don't see any issues with getting that scrap at prices which we've outlined in our studies before. So yeah, I don't see any problems in the near term getting that scrap. And when we do scale to a point where we start affecting the market, that's when we can bring in Titan project. At that point, we've got major cash flows. We can easily build the Titan project. It's fully permitted, and we can then make sure that we keep the scrap market in balance.
Okay, talk to me about the NASDAQ listing, because that's kind of interesting. You're also an ASX company, but reshoring to the US. You've got to expose yourself to the North American market, much bigger market. How's that going?
Well, the NASDAQ listing is doing really well. It trades for the last few weeks. It's been trading probably more than the Aussie listing. We had a very large.
Okay.
Yeah, there was a large $5 million crossing go through the other week. It's doing extremely well. Listing does extremely well. We have had great support from shareholders in the United States in our last financing rounds. Last year, we had 2 financing rounds, heavily subscribed by shareholders out of the United States, and we continue to see a lot of inbounds from both shareholders, customers that would like to be also potential shareholders in the future in the United States. So we're in a great position there. We've also gotten the support of the US government. When we were last on the show, I think we had just won the Air Force Research Labs Grant Challenge for titanium metal recycling. Since then, we've been had significant support from both the Virginia state, but also the US government, the federal government, through the Department of Defense in scaling our technology. So end of last year, November, we won a grant from the Department of Defense Production Act Title III program of $12.7 million to scale the technology. So we're definitely on the radar. People like us, people like what we're doing, people like the mission that we have to reshore our titanium metal supply chain because today it's dominated by China and Russia. That's not a good thing. And we're I think the Americans, really do love it. I've been, in the States now for almost a decade. And I definitely see that there's a lot of support around the US for what we're trying to do, because it is a critical need. And I think titanium metal, especially now, because of its use in almost a lot of current and future military platforms, there's a significant focus on it. It's import dependent from Japan. Japan has problems because of the rutile supply chain today. There's shortages there. The only alternative is Russia and China. So the US is looking at it going, how do we reshore this? And it looks like, one of the first companies in over a decade that the government has funded to reshore our titanium supply chain is us. So we're definitely getting the runs on the board at the US.